I've made a choice because of the new limitation in TradingView. They've recently restricted the use of more than 2 indicators at once. So I'm going to start developing trading strategies using a combination of 2 free indicators. So without wasting any time, go to the TradingView website and navigate to the indicators section. Now add the 200 EMA filtered parabolic SAR indicator to your chart. Once you've added this indicator, you've noticed some changes in the chart layout, making it a bit more crowded. So to enhance the signal accuracy, we'll need to tweak the settings of the indicator. So carefully and step by step, go ahead and apply these changes just like I do. Now take a glance at the chart and you'll see more than just signal generation. There's a moving average line on it too. The moving average line is here to help us boost the success rate of our strategy. So in an uptrend, when the candles are riding above the moving average, we'll exclusively go long. And on the flip side, during the downtrend, when the candles dive below the moving average, we only consider short signals. However, to achieve a more satisfactory win rate, we still require some support from another indicator. Stick with me as we incorporate this oscillator and then conduct a backtest on the strategy. To begin, return to the TradingView Indicator section and this time search for the STC indicator, a better MACD, and select it to include in our strategy. But before we can make use of the STC indicator, we need to make a few adjustments. Alright, here's how this indicator works. It draws a line that alternates between green and red. Additionally, the STC indicator has 2 levels. The signal confirmation process with this oscillator goes like this. When we issue a long signal, if the STC indicator line is green at that time and sits below the 25 level, it confirms the long signal. If not, we'll need to discard the long signal. Similarly, for a short signal, if the STC indicator line is red when the signal is issued and this red line is above the level 75, it confirms the short signal. If that conditions of the STC indicator are different when a short signal is issued, we'll disregard the signal. Alright, it's time to establish the entry criteria for our trades. First, let's focus on the short trades. To initiate a short trade, we require the initial indicator to generate a short signal. As the second step, the market trend should be bearish, meaning the price is trading below the 200 period moving average. In the third step, we need confirmation of the signal from the STC indicator. Now, once all these conditions come together, we can proceed to open a short position. In the following step, set your stop loss above the most recent swing high. Furthermore, for the exit strategy, aim for an initial target with a minimum risk-reward ratio of 1 to 1.5. Now, let's outline entry criteria for long trades. To initiate a long trade, the primary indicator should generate a long signal. At the second step, we need to confirm that the market is in an uptrend, indicating that the price is trading above the 200 period moving average. In the third step, we must ensure that the STC indicator confirms the long signal. So once all these conditions align, we're ready to open a long position. In the next step, set your stop loss below the recent swing low. Additionally, for the exit strategy, target an initial level with a minimum risk-to-reward ratio of 1 to 1.5. Let's now move on to running a backtest. We executed a backtest involving 100 trades on the gold chart utilizing a 15-minute time frame. And this backtest, the win rate for the strategy stood at 79%, allowing us to secure a substantial 124% profit over a span of 12 weeks. Throughout these 100 trades, we witnessed a streak of 4 consecutive wins compared to 2 consecutive losses. Nevertheless, if you're eager to become acquainted with one of the strategies I've employed successfully on multiple equations, then you absolutely need to watch the recommended video.